initial rushes in, so I'll just start with a bit of housekeeping. My name is Peter Holding and I work for Farmers for Climate Action, and I'll be chairing this meeting today. We'll be using the webinar facility in Zoom, so we will not be able to see you, but we will be able to take questions. So would you put your questions in the question and answer box? We will monitor the chat box as well, but sometimes the questions get lost if they go into there. First of all, I'd like to let you know that Farmers for Climate Action acknowledges the traditional owners of the land on which we work and the traditional owners of the land our guests and speakers are joining us from, and we pay our respects to the elders past and present and emerging. And in the case today, I'm coming to you from Southwest Slopes, New South Wales, which traditionally is Wiradjuri country. Right. Now, today's webinar is on engaging in environmental markets, and we have Rohan and Andrew. And for those of you who attended the webinar, I think it was 2 weeks ago now, they did the first webinar on how community engagement might be established in working with carbon markets and allowing farmers to engage in projects on their own land. And today, Andrew Ward and Rohan Clarke are going to give us a further, more deep dive into how cooperatives might work to facilitate the smaller or even larger farmers doing this at a reasonable cost and being able to retain some of their carbon credits for their own use. So I'll just let you know that Andrew Ward, who will be speaking to us, is a director of Regen Farmers Mutual. And he's also CEO of Ethical Fields, a consultancy specialising in community ownership. He's treasurer of the New Economy Network of Australia and director of Incubator Co-op and Henhouse Co-ops. His fellow director, Rohan Clarke, who will be speaking to us as well today. Rohan is the director of Farmers Mutual. He's also conservation advisor to Trust for Nature, and he's treasurer of Incubator Co-op and director of regenerative tourism platform Wayfarer Co-op. Now, if I can just find the right page. Damn, where did that go? All right, I think we might get underway. We've got 122 people that have turned up in the last minute or so, so more people are coming. I'll hand over to Rohan and Andrew to commence their discussion.
Thanks, Peter, and thanks, Claire. And thank you, Wardy. You're going to do the sharing screen. You're in charge of proceedings. Welcome from Wiradjuri country in now suburban Glen Iris in Melbourne. So, grey old day outside. What we thought we'd do to start with is we had some feedback from the prior session where there was a few requests for, I suppose, more detail on the environmental market side. So we thought we'd start with just a couple of slides on where the markets are at, basically in terms of current market dynamics. And so one of the things you'll hear said is that, like, prices of carbon in Europe are through $100, Australian equivalent, and that's true, but it doesn't belie the point that markets globally up until very recently have been absolutely dominated by government. And that could be government in terms of, like in Australia, where government, Commonwealth government's been running the ERF, and so it's a major buyer, or in the case of in Europe, where it's regulation that has been driving prices higher, and they're driving prices higher by one, requiring companies to offset their emissions, and two, on the other side of the thing, requiring who they, placing constraints about who and how they buy it. And so they've effectively been constraining demand while growing demand while constraining supply. And so on this chart, you can see these various points of when certain regulatory changes have occurred, they've led to changes in the price. So the point here is that government globally has been the primary player in the carbon market to date. Next slide, Wardy. And this is a complicated slide, but like the point here is just to give you a sense of where Australia fits in the overall scheme of things. With that little blue dot there, blue square there, that's our ERF program. On the left axis is the price the market pays for carbon in US dollars. And on the right axis, it's the volume that is being, of carbon that's being offset in that particular market. And so on the left, you've got, you've got Poland, Ukraine, Mexico. It's cheap carbon, effectively. So this carbon, a solar project in India, for example, might be $5 a tonne. And so that'll be over there on the left. Whereas on the right, you've got the European markets. And you can see that Australia's been sitting right about roughly $10 US for its period that's been operating. And so that is broadly the average of the market globally currently. So just to give you a context of what Australia's prices are relative to the world and the volumes. In terms of our market, it's also been absolutely dominated by government. 96% or something of the carbon volume done to date has been through the ERF. So they're predominant buyers. Similarly, in terms of biodiversity markets, they're state-based programs that are really driven by regulated offset requirements. So they're all, again, regulated markets. But you are seeing the emergence of, again, state-based programs such as the LRF in Queensland. But there's a bushbank program coming the second half of the year in Victoria. WA has just announced a program. We know that New South Wales has the PIPAP program, and they're in and around designing programs that are about environmental markets, and principally environmental markets growing beyond carbon. So in terms of the state-based programs in particular, it's looking at carbon plus, and the biodiversity stewardship program clearly is being at the Commonwealth level is looking at trying to catalyse biodiversity markets, leveraging the ERF mechanism. One of the key points about this, though, is from a market perspective, is governments are good at handing out money, but they're not necessarily good at catalysing markets. And so in terms of, sorry, Wardy, no, it's okay, you can go on the next slide. Good, nice anticipation. In terms of the voluntary side of the market, so the voluntary side of the market being defined as the corporate institutions that want to buy carbon, that side of the market has been growing at gangbusters globally since the start of the year. Apparently, in the west coast of the US, the demand has gone through the roof, and what it's been catalysed by is this net zero by 2030 or 2050 that like corporates have been signing up for effectively. And so what this is, and it's an interesting dynamic because the way it currently works in the Australian market is that consumers demanding change, but clearly by corporates buying carbon, that's impacting their margins because it's a non-productive investment in a sense. And so what is tending to happen is corporates are looking to buy cheap carbon where they can offshore and blend it with local carbon. So they've got the story about they're protecting koalas. And so this is an example here on the right where it's this is something you can you can offset your own carbon with respect to Boomi when you're buying a product, and you can see that they've blended solar projects with tiny little bit of carbon koala preservation in Australia in order to be able to kind of demonstrate that we're doing good things in Australia as well. And this is a common theme currently in our market. It's probably transitory, but this idea that corporate demand for environmental markets is growing. It's driven off carbon particularly, but they're looking for carbon plus. They're looking carbon plus co-benefits, and that's really around the narrative. So in terms of the carbon markets, because we're a premium market relative to the cheap carbon in India and what have you, what they're tending to do is to look for stories that can explain what the carbon they're buying is locally. And next slide, Woody. I think that's me done. Oh no, sorry, one more slide. So what you can see is that these trends. So we've got government, and we've got growing corporate demand, and we've got a market that's relatively dysfunctional because it's currently broker intermediated, and so that market structure is one where brokers maximise their revenue by promoting opaqueness. It's not currently in brokers' interest to promote transparency around prices, because that's at the detriment of their margins. And so what we're seeing is we need ways of kind of break this market, kind of disrupt this market. And so the government at the Commonwealth level is looking at this going, okay, so we're going to introduce a trading platform which will enable farmers to do it yourself and to be able to sell their carbon to corporate buyers directly. And they're also looking to support initiatives to help drive down the price of measuring, for example, soil carbon on farms. So definitively, government's motivated to want change and to find more efficient market structures. Similarly, corporates are also motivated to want change because they want to buy carbon at the most cost-effective price, but they're also wanting those co-benefits that we just spoke about. So they're very much in favour of transparency and standardisation, because then they can compare one carbon credit with another and really understand what that narrative is adding. And so this is leading to initiatives like the Carbon Farming Foundation out of WA, which is really about helping, they're a non-profit that's really about helping farmers to understand the do-it-yourself approach, and Morty will talk to that in a minute. But also things like the Marketplace for Nature, which the Regen Farmers Mutual is part of, which is around helping the buy side to come together in a way that we can create a common language so they can understand what the opportunities are from the sell side, from farmers and from other sources of environmental markets. So this Marketplace for Nature, its objective is to help to create a common language, a watering hole where buyers and sellers can come together for increased transparency and standardisation. So that was just a quick update on, just based on the feedback, let's say, onto where the market's currently at. Woody.
Thanks, Rohan. I love listening to you. Each time you tell this story, I get another little bit of learning. So I'm sure that was interesting to others as well. I've got the kind of job today to kind of explain as a farmer where you might take your knowledge of environmental markets. And I think there's a problem with access for markets, and most of us are too small on our own to cost effectively access customers, because, you know, the average farm is smaller than the average corporate's buying appetite. So when those scales mismatch, there's a difficulty with access. And I think that the options open to farmers are basically four, and we'll go through these now. You can do nothing, and plenty of people have been getting on with doing nothing for a while. And we know that there's some benefits when markets are early and immature, like they currently are, in waiting, because some people are going to get bloody noses. But I mean, this is Farmers for Climate Action, so I don't mean to be preaching to the choir, but I don't know that we can keep our heads buried in the sand too long. Farmers are on the front line of climate change and biodiversity loss, and they're the most uniquely equipped out of any profession across the globe to produce the food and fibre upon which we all depend, but also provide habitat, provide conservation, address biodiversity loss, sequester carbon. It's farmers who have the most to gain and the most to lose through rampant climate change or biodiversity loss. And so I think that it's possible, and you could argue, you know, potentially wise to wait but I think the costs of waiting in a market like this are detrimental, not just to your own profitability as a farm enterprise, but also to our nation and our future generations' capacities to deal with these twin challenges. You can do it yourself, and a lot of people, I can understand why you would want to go into a transaction on your own. You know, you're looking at the brokerage costs and you're going, geez, that's expensive or complex. But, you know, I want to do this right. I want to avoid greenwashing. If there's green tape to be handled, I'll do it myself. And you can, yeah, there are more and more DIY support services coming into markets. So Rohan mentioned the Carbon Farming Foundation, which if you have a standing carbon opportunity, they can help identify that by mapping your farm boundary, doing an inquiry into the FullCam database, which is the database the government holds over every part of Australia, and has identified what it will pay for standing carbon trees that are established to 2 meters height and have a 20% canopy over 25 years or 100 years. And so that's a regime, because it's not really a market in that it's a set of guidelines, which if you follow, you get rewarded with this many ACCUs. And it is possible to do a DIY style transaction in standing carbon, but it is far harder to do a complex or a unique type of transaction and take that to market on your own. It's rare that you as a farmer will have the agronomy, ecology, legal and technical skills required to market to a large corporate or an opportunity. But there are opportunities and there's some material opportunity costs. Like clearly, you know, it's a new market, and learning to understand that would take you away from, you know, day-to-day food and fiber production, and you've got to work out the opportunity costs of that. Okay, so assuming that you can overcome the technical and market barriers, there's still this problem that unless you're of a certain size, you're only going to offset a fraction of a corporate's appetite. And so it's unlikely, you know, this is sort of the golden rule, the person with the gold makes the rules. So if I'm a buyer for, you know, a larger amount than you have to offer, I'll wait until you aggregate with others before I buy, rather than trying to do lots of smaller deals, because the overhead involved in lots of smaller deals is difficult. And that's why, you know, the government have put $4 million into creating a scheme to allow DIY carbon farmers to put their offering onto a market. But unless that platform engages in an aggregation capacity, there's still a fundamental mismatch between the size of supply and the size of demand. Okay, so you can also go with brokers. Now, Rohan was suggesting this is such an immature market, and there is this growing demand. And so a typical broker has relationships with corporates that, through, you know, their consumer pressure, their desire for a social license, they're asking people to, you know, offset their biodiversity or their conservation, or their, more likely, their carbon impacts. And so a broker, you know, gets to understand what is that social license, what is that particular quantum of carbon, what is the budget that particular customer has, and then goes to source that from a mix of Australian and international markets. But you've got to understand that the brokers, their business isn't to promote the margin of the farmers. They're motivated to promote their own margins. That's the business that they're in. and the typical sort of fee is somewhere between 50 cents in the dollar going to the farmer and 50 cents going to the broker through various instruments. And that's a large transaction fee by anyone's language. But it's not the worst by any stretch. So there is a large international brokerage called South Pole, and we have been in discussions with them, and they were very happily talking to us about their soil carbon product, which offers farmers a zero cost method into the soil carbon ERF framework. And the farmer gets to keep 20% of the upside. And they presented that to me like that was a wonderful deal. And I was actually thinking, that's an 80% commission. And South Pole have had to pay for maybe some electric fences and a bit of polypiping and water troughs. And then they've got 80% of that farmer's carbon credits in perpetuity. I mean, that's a broker-owned market, not a farmer-driven market. And brokers, you're going to be dealing with greenwash and green tape, because that's the nature of environmental markets, and they can take some of that pain away from the farmer and make it less time intensive for the farmer. And if the farmer's doing well with their food and fibre production and they view their environmental markets income as a nice to have additional, which is the case for a lot of larger corporate farms as opposed to the family farm, well then, great, that they're happy to partner in Collins Street or Pitt Street or, Elizabeth Street with brokers that match their needs and come from the same schools as them and do the same things as them. So if you're an average farmer, the other option is to go with the Regen Farmers Mutual. And clearly I'm biased, I'm from the Regen Farmers Mutual, but our model is entirely the opposite of, say, South Pole, where we're looking for farmers to get 80 cents in the dollar from environmental goods and services, and 10 cents in the dollar from environmental goods and services supports a local farm group that supports each of those farmers at the local level within the transaction and within the compliance regime that each of those farmers are signed up to. And essentially you've got a brokerage fee of the mutual of 10% for legal and marketing and technical costs. And the mutual's job is to help farmers locally aggregate around environmental markets that make sense for that environment. So, we have, as of this morning, over 10 transactions at various stages of maturity that we're bringing to market, which are aggregations of farmers. And this is particularly interesting to groups like Landcare, who see that 10% and the 80% going to their members as, quite considerably different to the current brokerage costs. And they're able to bring to market new sorts of transactions. I'm happy to talk to them in the Q&A. But the mutual that is being created by farmers at the moment, it has in its constitution, it's a company limited by guarantee. So it has no shares. Being a customer of the mutual makes you a member, and you get one member, one vote. So it's democratic, which, we love democratic institutions in our politics and in our business. So, these values that you're seeing on screen are physically in our constitution, and they go right through to things like, the enshrining that members have control, ownership of their data, and that data doesn't end up being used against them in commodities markets or, in regulatory changes or punitive ways. So what the mutual does is we help farmers engage at local groups to work out what their environmental goods and services are collectively, to take those to market. And unlike a traditional agricultural market, you grow a ton of wheat, you sell a ton of wheat, you get paid for a ton of wheat. environmental transactions are long dated and serialized. So they're more like 25 one-year contracts on delivery of carbon based on annualized measurements to confirm that what you've sold is there and that it hasn't been cleared or lost. And one of the many benefits of the mutual is that we are there throughout that whole process to offer support at a national level. We have a shared infrastructure, but at a local level, it's very much contextualized to that group of farmers and that particular market that they can service. So the mechanisms of the mutual, we mentioned that it's a company limited by guarantee. It will have, two technical subsidiaries, one to manage the data so farmers can connect their on-farm information, their environmental information to the agreements that get them paid for doing environmental good. And then there's a fund which the mutual will own, and it actually enables us to bring on one farmer at a time and get them paid as they come on board, but sell to buyers at tranches, because buyers, as we know, have a different appetite. So to smooth out that liquidity between farmers coming on and buyers buying, there is a nature fund. Now, our mutual is in pre-formation, but in October, we're launching the mutual and recruiting our members using a crowdfunding campaign. And we expect that crowdfunding campaign will close before Christmas, and we'll have 1,000 farmers at least getting their initial environmental farm assessments, but also becoming shareholders and co-owners of the mutual. Now, how we get people into the environmental markets is by helping them understand what is the value of the environmental goods and services on their property according to different market mechanisms. So we've working with Accounting for Nature and various lenders and FarmLab and the Carbon Farming Foundation and ISO and Land to Market and AgForce. And we're working with them to be able to get farmers to collect the data, and the farmers retain the data. And then these organizations can interrogate that data and provide back to the farmer a view on the environmental goods and services on that particular farm. Now that enables the farmer to go, well, I have a soil carbon opportunity or I don't. I have a standing carbon opportunity or I don't. Hey, my whole of farm score, which takes into account animal welfare and total energy use on the farm, is one of the best in my region. That's an opportunity for me. Oh, my bank is willing to offset my borrowings in terms of my interest rate, saving me X dollars per $1,000 borrowed. And I can use an econd for soils or for native vegetation in order to take biodiversity or carbon plus biodiversity opportunities. And this is the step one, but obviously you don't know which market to go into until you know what you've got on farm. And so the opportunity for farmers to invest in the mutual at launch and to acquire their farm assessment, this is all set to kick off in October. I'm very excited. And if you bear with me for 2 more minutes, we're going to play our explainer video of the Regen Farmers Mutual. And then I'm happy to take questions about the broker model, the DIY model, or doing nothing model, and how you can access environmental markets. Thank you and enjoy this quick video.
Farms extend beyond the food and fibre they produce. Farmers create and manage environmental goods and services for the benefit of all people, protecting habitat, sequestering carbon, improving biodiversity. Up until now, getting individual farmers paid for this good work was hard. There's often a mismatch in size between an individual farm and what buyers want. And farmers are sceptical of greenwashing and green tape. Farmers trust each other. And that's important because the Regen Farmers Mutual is owned exclusively by farmers, not corporate middlemen. The Regen Farmers Mutual supports local groups to form across the country. As the number of farmers in any local group increases, the fixed costs get shared between more, reducing the costs for each farmer. Importantly, as more farmers join a local group, the combined ecological impact increases and improves the environment. The Regen Farmers Mutual provides common transaction infrastructure for every group and environmental market. This increases farmer negotiating power, reduces costs, and puts more money in farmers' pockets. Every day, more farmers are learning what their on-farm environmental goods and services are worth and becoming part owners of the Regen Farmers Mutual. You can become part of this future too. Find your local group to get started.
Thank you, Andrew. That was excellent. I think that little video did work. Everybody should have been able to hear it, hopefully. Now we have some questions. Did you want to add anything, Rohan, before we do questions, or we'll just share the questions up? Just share the questions, okay. Before we do that, I'll just let everybody know that this webinar is being recorded. Some people have asked if they can get the slides. I'm not sure if they can get the slides, but they most certainly can get the whole recording, which will be up on our website. I guess they can extract the slides from that if they wish, or maybe we can work out how to get you the slide package somehow.
Yeah, we can probably make that available to Farmers for Climate Action and your membership.
All right, now then, there's some quite good questions. Got a question here to start with from Chris D. The IPC ARC 6 report, which is that was put out the other day, reinforced the need for carbon budgets. If Australia played its equitable approach, it would run out of carbon budget for a 1.5 degree C future by around 2030. Carbon farming is currently the only way to come back from 1.5 degree carbon overshoot, but the potential size of the market is just way too small to be up for this challenge. How will the market accelerate and upsize to meet this demand? Anybody want to have a go at that?
I think the market, I'm not sure what the question is. I think it's more of a statement. Maybe, Peter, you can help me to understand what's driving that question. How will farmers pick up the desire to get into carbon markets to save the rest of Australia's carbon budget? Or how will politics change? Or
yeah, well, it's a bit of an open-ended question. I deal with it fairly regularly, and you know, my view on it is that hopefully the markets will solve the problem in a sense, because there is almost an unlimited demand from companies to sequester carbons, because they're all using fossil fuels at the moment and emitting, and there's almost an equally unmet demand for farmers to take payments for sequestering carbon. And as the question says, environmentally is probably the only way we can really draw the carbon down. So I imagine the markets will meet the task. The problem at the moment is the rules and the various government regulations are pretty, what I would call immature, and aren't up to the job just at the moment. I'm hoping that once we get past Glasgow and COP26, which part of the discussions that will happen there around with all the delegates is to sort out these market requirements around the world. So if they can come to some sort of an agreement there, we should be further along the track. I won't say we'll get it solved, but should be further along the track to sorting some of this out.
One of the ways to come at this is so the markets are moving from being government dominated to there is a voluntary. Corporates are being being drawn into to buy offsets, whether they're carbon or biodiversity or other type of environmental market credits. They're being drawn in to buy it because consumers are demanding that. And so in essence, the consumers are saying you need to offset your carbon footprint, which is where that net zero is coming from. So the market size from a demand size, as maybe Christy is alluding to, the market size from demand size is going from this to this, but the voluntary markets aren't constrained the same way as the regulatory markets are, in terms of, as we're kind of pointing out at the start, they're not driven by the same motive to necessarily just to offset 1 tonne of carbon at the cheapest price. There is a tonne of carbon plus what are the other impacts that I'm delivering, what are the socio or cultural impacts I'm delivering, what are the biodiversity impacts I'm delivering. So they're actually after an outcome that is broader than necessarily just simply offsetting that 1.5%, notwithstanding the fact carbon markets are the base product currently. So what that means is the opportunity is that there's going to be a real market emerge. It's going to be, currently there's a government buyer, one buyer, and then there's kind of large sellers. And we're getting to a point where there's one government buyer and there's lots of corporate institutional buyers. And so on the supply side, because supply always configures itself to meet the demand, demand's growing, and now supply will kind of come to match that. And so, for example, what we're seeing through the mutual is this idea of layered transactions. I think Woody was going to alluding to this. So an example of a transaction we have going, one of the pilots is in Bellingen, and that's a composite transaction where there's a group of farmers, and there might be farmers up in the river catchment area, and they've got a soil carbon, building up organic matter in the soil to increase the soil retention capability in the river catchment area. In the valley, there might be standing carbon, and there might be biodiversity plantings along the riparian areas, because that'll help to slow flooding. And then at the coast, where farmland is suffering from inundation, and the local environments are suffering from inundation from rising sea levels, and also flooding coming down streams, there's opportunities to undertake biodiversity connectivity and to make those habitats more resilient to flooding, in effect. And so here is an opportunity where there's a composite transaction. There's some carbon, there's some biodiversity, and then overriding the total, there's a possible flood mitigation kind of piece. Now, there isn't currently a market for flood mitigation, but there's a buyer, in the sense of New South Wales Transport spends millions of dollars a year, building roads and then repairing roads to recover from the flooding events that happen, happening every, it's 12 out of the last 14 years or something. So the point being that through something like the mutual, where you can create an aggregation to get the scale that buyers need, and to create the impact that you can deliver a landscape impact, we can then take a flood mitigation story to someone like New South Wales Transport and say, if farmers do these things on their farm locally, collectively, this will be the impact, this is the cost, and this is what you need to pay, or what would you be prepared to pay in order to achieve that outcome. And that's an example of creating a market beyond just simply the current carbon market. And that's the market, supply responding to demand.
I agree and echo your thinking, Rohan. And Chris, now I understand your question better. I'd say that the problem is we've been labelling a top-down regime where the government has mandated the process, literally called it methods. And if you follow the bouncing ball and comply with the methods, then you'll be rewarded with ACCUs according to a prescribed response. That's a buyer saying, these are the ways I want to procure things. That's not a market. A market is supply and demand doing price discovery and term sheets, to find an equilibrium. And that's what's just starting to emerge. Now, the problem is that farmers don't have an aggregation method or representation in that market. At best, they're a valuable, critical part of brokers addressing the buy side, but they're a supplier to brokers. But what we're talking about with the mutual is fundamental change of that dynamic and the creation of a market for the first time where supply can say to demand, these are the outcomes we produce, i.e. less flooding, greater drought resilience, and we're going to get paid for our carbon and the biodiversity. But in aggregate, we want to be rewarded over and above just the carbon and just the biodiversity, because we go beyond that. We have a social story. We have a landscape scale impact.
Very good. Now, there's the next question. I'll read out, but I don't expect an answer because I think you've just answered it. From Colin Pearce, can we gain some insights on how the value of best industry practices that farmers undertake, other than carbon sequestration, and who buys these benefits? So I guess that's was sort of covered in the last layering of different types of payments. Next question is, in yesterday's Weekly Times, this is from Ray Peck, sorry, in yesterday's Weekly Times, an AFI paper from University of Melbourne claimed cost of changing land management far exceeds net income from carbon credits. Would that be solved if Australia had a higher price on carbon, e.g. at the EU levels?
I mean, almost definitely that assessment has been done on taking productive land and turning it into a standing carbon forest of blue gums or some other monoculture, which I would argue is not necessarily great ecological or environmental stewardship in the first place. So under that model, yeah, it's taking away productive land, locking it up, and you know, the cost recovery is not there. But you know, methods which aren't yet as popular but hold far more potential, such as, you know, going from set stocking to time-controlled grazing, which increases your soil organic content, which gives you soil carbon to then sell. That has, you know, a positive in terms of production. You can do that at less cost per kilo of beef. You can run more head on your property. You can get a production level income and this environmental income without sacrificing production at all. So I'd say, depending on the environmental market that you're going into, and the fact is most of our market has been standing carbon up until now, you know, it's probably fair that they're swapping out productive land for unproductive carbon farming, but that isn't the future for environmental stewardship or for good farming.
Can I sorry before
no,
run on it? There's just to go back to, so the departure point in a sense for any local farming group is to understand the environmental opportunity in that context. And so that's why the kind of the entry product is this kind of farm assessment, bringing in those different kind of lenses. So whether it's accounting for nature or whether it's ag force, or the idea is to be able to go, can we help farmers get an indicative assessment about the environmental opportunities on their farm through these different layers, so that they can make an assessment as to, oh, okay, well, there's this opportunity, whether it's with respect to standing carbon or soil carbon or biodiversity or some other metric, and not only just on their farm, but in that context. So trying to provide the overlay of the NRM regional plan, what's the opportunity in that space? And so then we can do things like go, all right, so this is the opportunity, this is the asset, the revenue opportunity, what's it going to cost for that strategy versus that strategy? So you can do that assessment as to whether it is going to be economic. And you know, ultimately, I think we're kind of all kind of intuitively guessing that the world's moving to a place where it will be economic, because you know, we need to value our, you know, environment in a way that it is.
Now, this is more of a Carl question from Robert Day. How do you plan to prevent a takeover of the mutual by managers, as happened in the case of AMP or the dairy cooperative?
Demutualisation is a risk, but I mean, the mutual is set up so that, you know, you need 75% of farmers to change its corporate structure. we're providing one farmer with one vote. I guess when it gets to the point that 75% of the farmers want to demutualize, well, then that is its path. But if it continues to provide value to its members, and it the mutual, instead of, the reason most farm mutuals demutualize is because of succession issues with regard to one older farming generation being replaced with a younger farming generation, and that older farmer, having built up quite a lot of money and asset in the mutual, wants to liquidate their position for retirement. And that causes a lot of the strain on conventional mutuals. With environmental goods and services being an income stream that's not attached to the productive capacity, the food and fibre capacity of the farm, then I think you've got an additional revenue stream that resolves a lot of succession issues as one generation replaces the other. So without being able to stand with the crystal ball and without being able to change legislation, you do run the risk, if 75% of members want to demutualise, that it can be demutualised. But if we're solving the succession issues through the very nature of the sorts of income and products we're providing to farmers, hopefully we're not at the same risk of demutualisation as previous.
There is one structural thing you just haven't referred to there, Woody, in the sense of, so we're using rebates to ensure that that any value over and above kind of what the mutual needs for its long-term sustainability, any value over and above that can be returned to members in an equitable manner. And that's what CBH uses in WA. And so that's how they've addressed that exact issue. So the mutual can't kind of grow in embedded value until such time as 75% of farmers go, you know what, if we demutualise, we're going to capture all this value. There is a mechanism to deliver that, to distribute that value to members through rebates, that makes an equitable way to distribute that value and prevent the takeover from that motivation.
Very good. Now there's some other practical questions here. I'll put them all together. They come from a number of people, but they're basically asking about what is the minimum size of a property that would be able to participate in this process.
There's not technically a minimum size. We're looking for active land managers, but the $1,000 sort of price for an environmental assessment might mean that you really micro farmers might not be involved, but anywhere from 20 hectares up, I could see being interested in this. And clearly there's no maximum size.
Very good. Now, Martine Holberton has asked, is it possible for renewable developers to work with farmers to assist them in establishing their regen farming, carbon farming capabilities to join your network?
Martine, we owe you a phone call or an email, I think. Yeah, right now there's an issue with, pre the transaction, there's some costs around cat herding and baselining and understanding how a group can take their particular environmental proposition to market. And then there are transaction costs. When we have the mutual has a fund planned in 12, 14 months time, once we're at a decent enough size, and that can give liquidity and in the right hands can provide pre-transaction costs to farmers through grants that can be rebated back to the mutual once the transaction's successful. So yeah, right now there is an opportunity for catalytic sort of investment from philanthropy, from renewable energy, from other people to help these farm transactions through that forming, storming, norming kind of early stages and get clear on what their products are and get them up to some scale. Then the transaction costs are paid for essentially by the cost of by clipping the ticket when those incomes are sold. So there is an opportunity now, but I suspect over time the mutual zone fund will provide the liquidity to help groups establish.
Very good. Now, Richard Bentley has asked a question about water. Does the concept of environmental services extend to water use? Currently, it seems to me that the only way an irrigator can benefit from using less water is to sell it to another farmer. Saving water and delivering it to the environment is surely a worthy step and should be valued. A comment on that?
Yeah, I totally agree. We're working with a lot of riverland wine growers and the industry in that area. And they've been making amazing efficiency dividends, you know, dropping from 8 megalitres a hectare down to 5 megalitres a hectare, getting a better quality grade, better product. But we're looking at how they can take a portion of that efficiency dividend and have environmental markets buy at a pegged rate that water, because at the moment those irrigators, you know, are encouraged just to sell that on the open market and trade their water, or you know, to plant down more hectares of productive capacity, which isn't really an environmental gain at all. And so we're working through a transaction around that. There's some other transactions relating to water and nutrient and water and siltation that we're working on. And so, yes, water, I think, you know, they say it'll cause man to spill more blood than whiskey ever has, is a key environmental good and service, but it's just not as well understood as other markets. And it's firmly in the grips of having been a top-down regulated government-driven market. It never got to play in anything other than a dysfunctional market where supply and demand, you know, interact like the environmental markets we hope will. So yeah, look, water industry, water as an environmental asset, incredibly interesting. And there's lots of those irrigators looking at how they can align the environmental outcomes and the productive outcomes and the efficiency gains that they're getting.
Right. Now, just a technical question. I don't know whether you guys have got the answer to this, but somebody's asked that 1 tonne of soil carbon is equal to 3.67 tonnes of CO2, and the CO2 price, if it was $20 a tonne, translate to $73.40 for soil carbon. That's correct, isn't it?
It sounds, that math sounds.
That's how it works. Yeah. So I think that's what's happening. So what they're saying is that the price of a tonne of carbon in the soil is $73, not the $20.
Oh, okay. Yep. That's fine. CO2 is probably the best.
Yeah. Carbon equivalent, whether it's methane or what it is. Yeah. All right. I don't know whether you've got a comment on this one. There's Marina Bistron has asked about soil credits. What if your soil carbon is already very high? Is it better to start with a farm with poor soil and build it up? Well, yes, but you've got to start where you are. I don't know whether you've got a comment on about getting started. I mean, I think that's an interesting question, that sitting and doing nothing, even if you're doing the right thing, means you get further behind the 8 ball all the time.
Yeah, there's an opportunity on the landscape scale impacts to look at indexation. And so within a group, you want to start a transaction in a catchment when it's economically viable to do so. But then you want to encourage other farmers into that transaction over time. So 15% of farmers in a catchment makes a difference to the hydrology. You want 16 to 95% of farmers to also join into that transaction over time. So they're all going to have changes over time, but the initial measurement of state, so how much biodiversity or carbon was a particular farm enterprise bringing into the transaction for that landscape scale, that's the way that you can reward farmers who may have been on the regen journey for 20 or 30 years, may have really great levels of soil carbon, and they're building slower or building from a higher base, and traditionally there's no reward for that. Indexation at a landscape level is one way that you can adjust for that. But I always, it's a bit like telling my kids off, like, you were happy with the decisions you made to build your soil carbon and manage your practices, up to that soil organic content. You should be rewarded and praised for your good work. But now the mechanism has come in, and you can get paid above that. You moved first with the information that you had, and no one's blaming you for that, but it's very hard to get what they call vintage carbon, backdated carbon. Very hard to verify, very hard to substantiate. And so I think it's better to focus on what you can do and the opportunities in indexation than it is to worry about the neighbour's flogged his place out and stands to benefit more than me, who's been doing good things for years. Yeah.
Rightio. Warwick Giblin would like to know, with 2 degree plus of temperature rise quite likely facing us, how reliable will the security of the standing and soil carbon assets held by a farmer be? Is it not that those assets may only be short-term, lost by more bushfires and droughts?
Yeah, I think that's an existential question in some ways, because the best way to mitigate the temperature rise that's forecast is by engaging in environmental goods and services and the creation of those through good stewardship on your farm. So you can do so, but if we have a wholesale shift of environment, which it is likely or possible, then there are going to be adverse effects. One of the benefits of the mutual is you've got this cross-collateralization locally. So any farmer entering into any environmental market, there's a collateralization piece, anywhere from 10 to 30% buffer in case of environmental fires, floods, other unforeseen features. When you get a number of people in a transaction, they're cross-collateralizing that. When you get a number of groups like we will in the mutual, they're cross-collateralizing one another. So in the event that there is some loss of biodiversity or complete loss of habitat or complete loss of carbon across the portfolio, actually the mutual's in a better position than most to cross-collateralize that. But there is, still a fundamental risk that we are facing the twin challenges of runaway climate change and runaway biodiversity loss, and the future's uncertain and it could be bloody horrific.
Yes, well, we won't go there today.
Yes.
Hopefully. I'll just make a point. Leah has put up your Facebook page in the chat channel, facebook.com groups, farmers, Regen Farmers Mutual. So I imagine anybody that's looking for more information might go there and might find some interesting discussion. We're at 1 o'clock, so we might call that a halt for the moment. And I guess if anybody's got further questions, they can either write to Andrew or Rohan, or they can write to myself at Farmers for Climate Action, and we can do our best to get an answer back to you. But thank you very much for today's discussion. It's been very interesting. There's lots of good chat in the chat channel.
Thanks, Peter.
That was good.
Now, just some final information. Anybody that's interested in looking at this webinar again, it will be up on our website. And if you go to the website and you feel you'd like to know more information about what Farmers for Climate Action are doing, there's a joining page there. It doesn't cost anything, and we will try and inform you. Things we're doing is, at the moment, are trying to support local groups empower themselves to take advantage of these sort of activities. We don't have all the answers, but we find that if we talk to all our farmer groups, we can get close to what the answer might be. So I would encourage you, if you're interested, seek out a local group in your area, some sort of farmer organisation or whatever, and see whether they can help you or come to us. Thank you very much. That's it for today.
Great, Peter. Thank you.
Thanks,
Yeah.
Rohan. Thank you, Pete.
Thanks, Claire.
Bye.